guys. Thanks for tuning in today. We are back with First Financial to talk about credit scores and credit repair. We are ending the end, we're getting towards the end of 2020, and it's time to start looking forward into 2021. And right now is the time that you should be thinking about your goals and the things that you want to achieve in the next year. And whether you're looking to buy a home or a car or just clean your credit up, now is the time to start thinking about it and the steps that you need to be taking over the next 6 to 12 months. So I'm going to turn it over to these two, and if you got questions, make sure you're asking, and we'll get them answered today. Community Outreach Officer for First Financial in Cincinnati Market.
My name is William Johnson. I'm also the Community Outreach Officer in Cincinnati, Ohio.
We're going to get started talking about credit reports and scores. So, what is credit? Credit is a part of your financial power that helps you get things you need now based on a promise to pay later. So, you might apply for something, for instance, maybe a house, a car, something smaller like a credit card that you want to just buy, make a starter for your car. And you'll get it now, but then you'll pay on it for a small period of time until everything pays off.
And 5 reasons why credit is important. Number one, credit can affect where you live. Two, auto loans require good credit, so if you're looking to purchase a car. Three, credit checks for employment. Four, business loans require good credit. And five, living expenses also can require good credit.
So what is for about 10 years, I would say probably more than 50% of people don't know where they fall in with their credit score. Your credit score can fluctuate as well, so you always want to know where you are and then where you want to be. So I would start at the top. So exceptional credit is 800 to 850. Very good credit is 740 to 799. Good credit is 670 to 739. Fair credit is 580 to 669, and poor credit is 400 to 579. I guess like there's a lot of things that go into your credit. We'll get into that a little bit later. But I've seen just my personal credit maybe shoot up 50 to 100 points because I paid something off, or maybe something hit my credit and it went down 50 to 100 points, and I would say a day. So definitely keep an eye on your credit and always look at it and see where it's going.
In addition to that, if you want to know, what type of loan that you can get approved for, let's just take a home loan. You're looking to purchase a house. You have to be somewhere in the 580 to 669 and above to be approved for a mortgage loan. There's different types of products out there that you can be approved for. But if you're close to the 580 mark, make sure you get to that 580 to go get approved for a loan. Looking at a car loan, you probably want to be somewhere between good and exceptional, starting around 670 to get a low rate on your car loan. So that's a few things to keep in mind.
And it's okay to ask the lender, hey, where do I need to be able to get a house? Or hey, where do I need to be able to get a credit card or a car loan? Just so you know your credit pool. Say you're at a 580 and you need to be at a 740. You'll know yourself, I don't need to apply for this. That's okay to ask.
If you could speak up, they're having a hard time hearing.
Okay.
I will try to yell. All right, next up is the 5 factors in general of a FICO model. And just to give you FYI, FICO is the Fair Isaac Corporation, and it's based on 5 factors. Number one is your payment history. 35% of your FICO score or your credit score is from your payment history. So you have to make minimum payments. Make sure you do make minimum payments on time. That's all that the creditors are looking for is that you are able to make those minimum payments on time. The next is the amount owed. That is, for example, if you have a credit card that's $1,000, the credit agencies will look at how much you owe towards that credit limit. So if you have a credit card that's $1,000, you don't want to go above $700. So you want to use somewhere between 70% and less on that credit card or that loan that you have. The third factor history is 15 minutes. So that is just the link that you have started your credit history. You can start, when you were younger, older, but as long as you have a lengthy credit history, that will help out to your credit score. The next, the 10% is mixed credit. That is the difference between revolving and installment. So revolving credit is your credit cards, your personal line of credit. It continues to stay open and it never closes. Installment credit is credit that has a beginning date and an end date. So your car loan is for 3 years, 36 months. It has a beginning date and an end date. So 10% of your score is made up of that. And then this other 10% is made up of new credit. So if you apply for a new car, a new credit card, a new mortgage, that can take a hit to your credit score, but as long as you're making payments on time, it will increase your credit score also.
I would say a best practice to do, I just do this personally, is have this chart up. Look at your credit score, look at everything that's on your credit, and put them in the little pie sections of this chart so you know where you need to work on. I was at a score for a long period of time and I could not figure out why, and that's because I didn't have a mixture of revolving credit with installment credit. Once I did that, and just to go back to a screen, that's when you can see your credit score will skip up or it dropped down. If you lose like a revolving line of credit or an installment loan, it can go back and forth.
How much will your credit score go down if you don't pay on time?
That's a good question.
Very good question.
I would say your credit score could take a hit between 20 to 30 basis points. So let's say if you're at, if you go up to the other screen, if you're at a 580, it can drop down, it can drop you down to 4 just by missing one payment for that. So you always want to make sure that you are trying to make at least minimum payments on time.
And I don't know if you know, William, I don't personally know how long it takes to get it back up there. So even say for some reason, because Christmas is coming up, you miss a payment this month, I don't know if it might take 2 or 3 months for it to come back up to where it was.
Yeah.
So I would highly suggest, because I'm a very busy person, to set reminders. Going on your credit card or your lender's apps, and it'll remind you to make your payment every month. Any more questions? Awesome. So way to build your credit. This kind of goes hand in hand on building your credit as well as establishing credit. So get a secured credit card. You can go to any financial institution and get a secured credit card, and that'll definitely help you build your credit. The difference between a secured, credit card and a regular credit card is you actually have to put the money down. So say for instance, I want my credit limit to be $1,000. I go into the bank with $1,000 and that $1,000 is held. Every time you use the card, you pay it just like a regular card, but your limit is secured by what you put down. That's a huge way to build or establish your credit. Also getting a credit building loan. A lot of financial institutions have this, and it's basically a loan that's secured either by your money or by the bank's money. You make payments to that loan monthly, and on your credit bureau, it looks like the bank gave you an actual loan.
Mhm.
So going back to that screen where it has the scores for your credit, say your score is at 300. We all know if you went into a bank, you most likely get declined for a loan at 300. It looks like the bank actually gave you the loan and you're paying on time. So that's something to look at as well. And become an authorized user on the account. So for instance, let's say William had a credit card, had several credit cards, his credit score was great, and I maybe didn't have any credit or my credit wasn't so good. If I became an authorized user on the account, that'll help my credit as well. So a lot of people do that for their kids, especially before their kids even get credit. That'll help them have great credit when they're ready for it.
How difficult is it to get a credit builder loan?
It's very easy, very, very easy. And normally they don't even look at your credit score unless you maybe have, it depends on what financial institution you go to. So maybe if you had bankruptcy in a year, you might have to wait another year, but it's very easy to get a credit building loan.
And I want to just add to the credit builder loan. What financial institutions do, just like First Financial, is that they will put money aside in an account that you can't touch. And as you're making payments back to that loan, You're paying the principal and the interest of that amount that's set aside. Once you reach that end, let's say for 12 months, you have a 12-month loan. Once you reach that end and you make all your payments on time, they give you that $1,000, or they give you that amount in the savings account. So think of this as an example. Um, you open up a credit builder loan in December of this year, and you do for 12 months. By next Christmas or next holiday season, you make minimum payments throughout the whole year. But at that back in December of 2021, you will have access to those funds to spend or put into a savings account for you to use.
So that loan doesn't have to just be used for credit building. I have a ton of customers that come to me and savings is huge for me and they're like, I just cannot save. I can't wrap my mind around it. And I'll put them in a credit building loan to help them save. So next year they don't even think about it. Their credit's better and they save that money as well. So also get a cosigner. That can go on any kind of loan. If you have a cosigner that would be able, so say for instance, I'm trying to get a car loan and my credit isn't the best and I can't get it, and I have William come on and get the car loan. Just by him coming on the car loan will help me with my credit because I wouldn't have been able to get the loan in the first place. And then also applying for a credit card at a store or gas stations. Those credit cards are most likely a little bit easier to get. So, and their limits are a lot smaller than maybe going to a bank and getting a credit card. So that's a way to kind of build your credit. If you don't have any credit or your credit's kind of medium, you can go just to maybe your favorite store. That's what I did when I was establishing my credit. I noticed that I was at Bath and Body Works way too much probably. So I got a credit card, minding that I was making my payments on time every month and not missing them, but it was something I was already doing. And make a large down payment and negotiate a loan for the balance. Wanna cover that one?
So yeah, so for example, if you look at the make a purchase on a car or a home, and if you have money already saved up, and the car loan that you apply for is 20,000, but you have 5,000 that you can put down to that loan. Now what you're paying back is only 15,000. So that will also help you build credit that way as putting a down payment, because you're not asking the bank for the 20,000. You're only asking the bank for the 15,000 because you already have five.
What's the fastest way to destroy your credit?
Um, do
Go
the
ahead.
do the opposite of
All
this.
that, yeah.
Don't If you don't pay on time, that's going to hurt your credit. The amount that you owe, if you keep it almost at 100% utilization, that's going to hurt your credit. So these are the two factors that will hurt your credit. If you don't pay on time, if you neglect to pay for 30, 60, 90, 120 days, your credit will just go down like a snowball. So these two factors can definitely hurt your credit, like just like that.
I've seen it hurt people's credits like in months. In a month, someone can miss a payment and then rack up on their credit card and it just go down. I personally would say this is huge. Just for me personally, watching my own credit, the amounts owed. Say I have a credit card for $1,000 or one for 5,000. In my head, I don't even think, hey, my credit limit's 1,000 or 5,000. I do the 30% and never go past that point because I've seen people's credits be highly affected that way.
Is it okay to take your time paying back on a credit card if that's all you can do?
Yes.
Absolutely.
Yes.
So it won't, I'm sorry.
No, at least pay the minimum. At
Yeah.
least pay the minimum and just take your time. And if any month you have extra money or extra cash from somewhere, and you can pay a little bit more, do that. But take your time and just pay the minimum. It's not a race, it's a marathon, so you have time to pay down. But over time, you can probably pay down a good chunk of your credit card bills, and just by paying the minimum on it. So next we're going to talk about maintain credit. One of the things that we've just been talking about is pay your bills on time as agreed. So whatever that agreement is, with the credit card company or with the financial institution, make sure you do pay on time, even if that's the minimum that you can make that month. Continue to pay down your debt. Continue to pay down your debt balances, which is what you would do over time as paying your minimum. Keep the proportion of the credit you use low compared to the credit limits. So once again, I was talking about having that $1,000 credit limit. Don't go above that 70% mark. If it's $500, don't go above that $300 mark. So whatever you do, keep it 70% less of the limit that you have. Don't apply for too much credit. For the life of me, I can't think of a reason why someone would need 5 different or 10 different credit cards out there. So don't go out and apply, because when you do, every time that your credit is ran, it brings your score down. So if you have 1 or 2 cards and that's good, great. Keep it at 1 or 2 cards, but don't apply for too much credit. Avoid actions or inactions that may create new entities. So once again, avoid the action of going out and applying for credit or trying to get a car loan that will create other entities on your credit score. Pay your taxes on time in full. So if you do owe state, county, federal taxes, make sure you pay those on time. Check your credit report regularly and dispute any errors. Last time we was here, I talked about checking your credit report. You can do it 1 time a year from the 3 credit agencies that's out there, and it's really easy and free to do to check your credit report. You can do it once every quarter. And last is just keep good financial records. Make sure that you are opening up your statements. I know, I get it. Sometimes the balance is really high. You don't want to see the balance, but make sure you keep records, because that also shows how you're paying down. And it also gives information in your records to show you if you just pay a little bit more, how fast that you can also pay it down.
You also know where you're always at. The only thing I kind of want to cover that you went over is don't apply for too much credit. I would say once you get your credit where it's really kind of the fair to good to exceptional, everywhere you go, especially if you're a shopper like me, will say, hey, do you want this credit card for 0% for a year, especially around Christmas time? That's hard. But the more credit you apply for, keep in mind that's going to affect your score. On this one?
Mhm.
So to repair and improve your credit, like William said, get and review your credit reports. The biggest thing is just to always know where you're at. Even if you're starting at the bottom grid, just know where you're at so you can work on it. Dispute and correct any errors. If you see any error in your credit report, definitely go ahead and dispute it. I know we talked about this last time. Worst comes to worst is maybe you forgot about it. I know I had something a while ago that I totally forgot about it. But I was like, let me go ahead and dispute it. By the time they came back, I remembered it, but what if it wasn't me? So keep in mind to always dispute and correct any errors. Pay all of your bills on time as agreed. We kind of discussed that at least paying the minimum payment is going to do wonders. That's when you get in trouble, when you don't pay your minimum payment and your score can drop. So use as little of your credit limits as possible. That kind of goes to the chart for the 30%. The sweet spot is 30%. I know that's hard sometimes, but that will help your credit just stay at a great credit score. Use a credit building strategy. So that kind of goes on the secured credit card that we talked about, the secured loan that we talked about, and keep old accounts open if you can. So I know a lot of people, especially nowadays during Christmas, are like, hey, I have this credit card out here that I haven't used, but you might have had that credit card for 20 years. If you close that account, that can affect your credit as well. So keep in mind that you still want to maybe not use that card. You might have to do what I have to do. What I do personally is hide the credit card from yourself just so you don't use it, but you want to keep that open because that shows your credit history and how long you've been using credit and building your credit. And apply for a credit card if you need it, or only if you need it, excuse me. So that kind of goes back to the shopping, or kind of goes back to, hey, my credit's awesome now, I can get anything I want. Do you really need that? Think about how, if you're getting a credit card, say right now I have $20,000 in credit card debt, and I'm okay with that. But say I have excellent credit and I can get another $10,000 loan, a credit card. If you go somewhere maybe to get a house, they see that $10,000 as you're able to walk out of their office and use it and have $10,000 in debt. So keep that in mind as well. Negotiate different terms. So that just kind of goes in, kind of make probably more like a car loan when you're getting a car loan, and negotiate the terms and the rates as well. The last one, it's hard to see. So ask for a goodwill deletion. Basically what that means is if you, for some reason, missed a payment, something happened with something that reported to your credit, go to that lender, to see if there's any way that they can take that off your credit. It rarely happens, but you won't know unless you ask. Anything to add on that one?
Yeah, and I will also say, talk to that lender, talk to the financial institution. If you're looking to really repair and improve your credit, they want to help you out. They want to make sure that you can make payments on time. They want to, kind of, if there's any blemishes on your account, try to help you through the process. So go through your statements. We talked about keeping good records. Go through your statements, take a look at them. If you have to talk to someone, they're there for you to help you through this process to improve your credit score. And on our last slide, or second to last slide, we talked about the right to free credit report. So you get one free credit report every 12 months from each nationwide credit reporting agencies. And the ones that we have out there is Equifax, Experian, and TransUnion. So you can go onto their websites and just see what the difference is of your score with one compared to the other. Maybe there's something on Equifax that's not on TransUnion that needs to be taken off Equifax. You want to make sure all three of the credit reporting agencies show your credit report the same. The numbers may be different because of the way they report it, but you want to make sure that they are the same information that's being reported out to them. Also, another one is go to annualcreditreport.com. It's a website that has all three. If you want to just go there, you can see all three at the annualcreditreport.com. It is free. Anything that asks you to put your credit card or debit card in, do not go to that site. Do not go forward. You go to annualcreditreport.com and get that information.
Are there ways to speed up repairing your credit?
Like, not really. I mean, it's gonna take time. I would say doing the secured products is the only way to kind of speed that up, or paying things off. So a lot of people, I know a lot of customers that I work with, when they get a large income tax, they'll pay stuff off, and then a couple months their credit score will go up.
I would also add into that if you do have multiple, you do have multiple credit cards, you do have multiple loans. See if you can do a debt consolidation into one loan. If a financial institution or a credit card you can put everything into one. Now you have one loan that you're paying towards, and you're paying that down. That will also help your credit score. I won't say it'd be overnight, but it will help you credit score go up. But in addition, if you do a debt consolidation, you may be asked to close out some of your credit cards or close out some of your loans. Keep in mind that we'll go back a few screens. Keep in mind that 50% is your credit history. So you want to close out your credit card that's the newest credit card. You don't want to close out the one that you've had 5, 10, 15 years. Because that's your credit history. And you want to show, good credit history whenever you are ready to apply for a home or car again. So just keep in mind if you do a debt consolidation and they ask you to close out any of your cards, close out the newest card first. So if you apply for a card this year or last year, close out that one first, but I'll keep the oldest card open.
Another one is someone is asking, I have three credit cards that are maxed out.
Mhm.
How in the world do I get out of this?
That's a good question. Look at me because I've been there too, and it once again it's a marathon. It's not a race. So the first thing that I did is I went and talked to the credit card companies just to see what I can do, just to see if they would help with any late fees, just to see if they can lower my balance or help me out. So please, I want you to talk to the credit card companies first and see if there's anything they are willing to do to help you get that balance. And once you get on a good track, and make sure it's around your pay period. Make sure that okay, I know I'm gonna pay $25, $30 towards this credit card during this pay period. to help that balance to kind of go down. And just remember, it's a marathon. It's not a race. So as each month as you get your credit statement in, you'll see that balance kind of keep going down and down. So I would say be patient, talk to the credit agencies, and they will work with you.
And be patient. I mean, it's a huge thing, and keep making those minimum payments. I'm a visual person, so I mean, if you come to my house, I have poster boards that have my credit card balance is this. When I make, say, it's minimum payments $25 every month. This is where I need to be to pay the card off. Maybe I get a bonus and I put a little extra on the credit card. But just be patient. Like you said, it's a marathon. It takes time.
Is it worth paying someone to help me with my credit?
It is. There's a lot of free companies. I don't know any off the top of my head. But there's a lot of people who have a passion for helping people with credit that don't charge. I would say walk into your banking center. Some bankers love doing this and they love helping people with their credit and they will help you as well. So I would say look at your free options before you pay somebody to do it.
And I would say just a little bit different. If it is important to you, which I believe that it is, I would say spend the time to do it yourself because you'll get the most out of it. I know that we all like convenience or we all like things to be done for us, but with this, I would say focus on spending that time and going through, getting on the internet, getting on the credit repair sites, and spending that time doing it yourself because you will get more gratitude out of that. I know a lot of credit repair companies that may charge you to do that. So, try to do it yourself first if you can't, and it's just getting too much. You just want someone, to walk you through that. Then I would say next up, go to a credit repair company.
I can say once you do it to yourself, you'll be obsessed with your credit score. Like I was telling people my credit score, and they're like, "We don't care. Like we're gonna screw it up because you worked on it, you spent that time on it." So that's another good thing about doing it yourself.
What does it mean to reconcile your
Like a credit card account.
account? I'm assuming they mean that when you get your statement to make sure that, like, what are you looking for if you're looking at your statement?
I would say first, just me seeing so much fraud, especially around the Christmas time. Make sure every transaction is yours.
Yeah.
The balance is yours.
Mhm.
The interest rate didn't do anything crazy because some creditors can up your interest rate. Maybe there's no late fees. We're all human, so I know one time I actually looked at my statement, didn't even know. I think I made a payment like they said it was a day late, but I really made the payment on time at a late fee. So I called the creditor and said, "This is the time I made the payment." They were able to take that off my credit and waive the late fee. So just look at everything, because it's your credit at the end of the day.
I would just add, like, if you purchase anything with your credit card, keep the receipt. Make sure that that vendor, that place that you went to charge for whatever, is the same amount that you charge for on your statement. And just go through and just check off just to make sure that it matches. And that's what reconciling your account means. Is that you're going through and you made 10 transactions this month, there should be 10 transactions on that statement.
What kind of help can I get at First Financial to work on my credit?
So we have secured credit cards that I went over, and we also have the secured credit loan as well.
It's called a credit achiever loan that we do have, and I kind of talked about. I think it's anywhere between 300 to 3,000. You can pick the term. We as a bank will put those funds into a secured savings account, while you basically, in your mind, are making payments back to this loan. And once you have made payments and paid it off, we will then turn that $1,000, $2,000 over to you. But keep in mind, what you're doing is making those payments on time is helping out your credit score. Um, we don't report it to the credit agencies that it's a secured loan or secured credit card. We report it to the credit agencies that you just have a loan or card with us. So they see that, okay, Mrs. Smith is making those payments on time, the credit score will start to go up. So those are the two products: secured credit card and the I know it says credit builder loan. We call it a credit achiever loan.
At First Financial.
And also with the credit achiever, the savings account, there's an interest rate. So at the end of the year, you might have made $100, whatever the interest rate is at that time, that First Financial will give to you as well. And I've actually, just an example from a customer, I've had a guy come in, I don't remember what month it was, and he was fresh out of college, didn't have any credit whatsoever. We put him in a credit building loan, and it took him it wasn't a year, I wanna say it was like 8 to 9 months. He was literally in the office behind me talking to the mortgage loan officer about to buy a house. So this definitely does work. I personally did it because I didn't have any credit, when I kind of first started in banking, and it helped me tremendously.
They're asking if you can repeat the question back if we can't hear you. So the next one is, with student loan interest suspended, should I still be making payments, pay it off, or wait?
The question was, with student loan interest suspended, should I pay it off, make payments, or wait?
Wait,
Wait.
wait.
So with student loans, I would say if you are in a rhythm of paying them already, stick to that rhythm. If they're not accepting payments now, put that money aside, because you know once we get through this time that they're going to start making payments again. So if you're in that rhythm already, just stick to that rhythm. If they're not taking it, just put it into a savings account. And I know it's hard, I get it, but put it in a place where you can't touch it. Because you know down the line, if it's 6 months, 12 months, we're gonna start making payments again, then just be prepared for that.
And if you can, I would highly suggest just to make the payments, because they're not going anywhere. So if I don't know what the situation is, if you're not working right now, but if you can, definitely try to make the payments. Or at least put them to the side.
Should I pay extra towards my mortgage?
So the question is, should you pay extra towards your mortgage? I would definitely say if you're in a situation where you can and you have enough money to, you definitely can. Because then once you pay your mortgage off, you can pay it off a lot faster. So I know at First Financial, I can't say at any other bank, when you go to make your mortgage payment, they'll ask you if you want to put this on your principal or the interest.
And sometimes if you pay over your minimum amount, it just goes directly to principal. I've heard, if you have a 30-year mortgage, if you pay, I don't know, $50 to $100 extra on your mortgage, you can pay it down by almost 7 years, which is amazing. So that takes that 30-year mortgage to a 23-year mortgage, if you would like to do that.
All sorry. Go ahead.
I was gonna say, just either do the math yourself or call your mortgage loan officer and ask them like, hey, if I pay $100 extra, how faster can I pay this mortgage off?
When they give you the option to pay the interest or the principal, which one should you choose?
When they give you the option to pay the interest or the principal. So your minimum mortgage payment is going to go both to principal and interest. Anything above, so let's say your mortgage payment is $750. If you give them $800, $750 is going to go to interest, principal, anything in your escrow for taxes and insurance. That $50 is going to go directly towards your principal. Your principal balance is what causes your interest. So if you want to pay down your principal balance, it will help you pay less in interest.
And the interest is what the bank is making off of your payments. So you'll want the interest rate to be lower.
I need to get a car, and the lot offered me 20% interest. Is that
Good.
That is a very high interest rate.
Repeat the question.
Oh, sorry. I need to get a car, and the lot offered you 20%
Mhm.
interest rate. So my experience, that is a very high interest rate. It kind of depends. Your interest rate will depend on your credit history and what your credit score is. So if you know your credit score is better, I would highly suggest to go to a bank. I can't tell you exactly. I don't know if you know the rates off the top of your head. I'm not a numbers person, but it's a lot lower than 20%. So I would do some shopping at banks and see what their interest rates are for cars. I can tell you it's normally more than half of what a 20% interest rate is.
And I would just like to add to that is every time that you purchase a car is a depreciating value. So as soon as you drive it off the lot, it's not worth the same that you paid for it. So 20% is extremely high. There are car loan rates out there now between 4 to 7%. So if you can look for a dealer that's willing to be in that range with you, that's be really good for you. Just keep in mind, like you don't want to pay for two cars with one payment because at 20%, that's a really high interest rate. So with the depreciation of a car, you want to make sure that the interest rate is low.
And keep in mind, when you do get a car from, a car place, that when they run your credit, they'll see whatever bank is gonna pick you up. So I've seen people come in and say, hey, the car dealership is giving me a 20% interest rate. I look at their credit and they've been hit like 20 times. So I would suggest to go to a bank because we only pull it one time and we can offer you what our interest rates are, which are, I don't think they've ever been higher than a car dealership.
I don't think I knew that you had the option to go to the bank directly.
Mhm.
I thought you had to go through a dealership.
No, go to the bank and say that I'm looking for an auto loan. They can either like pre-approve you, pre-qualify you for it, and you can go to the dealership and say, hey, I have $30,000 that I was pre-approved for.
The question was what options you have for an auto loan, and you do not have to go through the dealership. You can go directly. You can go to the dealership to look at a car that you like, and then once you find that car, ask the dealer to give you the invoice or the specs of the car, and you can take it to a bank to see what you can get approved for.
Interesting.
A lot of people don't know that.
I had no idea. This person says my credit sucks due to student loans. I'm looking to move soon, like within the next 2 months. What are my options?
So do you know if they're moving to to get a mortgage or an apartment? So the question is that the person has a ton of student loans and their credit is very bad because of the student loans and they're looking to move in the next couple months. So what are the person's options? I would say, while she's looking to see if they're looking to get a mortgage or to get an apartment. I can't tell you exactly because we're not mortgage loan officers, but I know at First Financial, in different mortgages, it depends on what kind you get. They might, I wouldn't say dismiss student loans, but kind of everyone has student loans nowadays. So look at them differently and understand them better.
And in addition to that, you may, wherever you move, if it's into an apartment, you may have to tell that landlord, because they can pull your credit, the circumstances around your student loans. If you're looking to get a mortgage, same deal. The mortgage loan officer may ask you, what are your circumstances with the student loans, and what is your plan to get back on track?
Maybe what happened in the past. I've had a customer that had a crazy situation with an ex-husband in the past, and she literally came in with her notepad and said, from this year to this year is when I went through this, and that's why my credit looked like that. I was able to talk to the underwriter, and not that it was ignored, but they understood instead of looking like she just didn't make payments.
So the easiest way to get back on track, especially if it's for late payments, is to make sure that you start paying everything on time.
Absolutely.
And also talk to the creditors to see if you can get any of those late payments removed to help you out.
Okay.
Question.
You can come. Anything come to mind?
I think we talked about it the last time, but we because we all have student loans. What impact does the student loan have on your credit score? Let's say that you have, you're fresh out of college, you've got $60,000 or $70,000 in student loans, but your income starting out in your field is only what, $40,000 a year. So your debt to income is obviously going to be skewed because of those student loans. What does that look like as far as an impact? Are they weighted differently?
Yeah, so with student loans, if I think the span to pay those loans back is kind of like a mortgage. You have a long time to pay those back. So from my understanding, student loans, minimum payments can be less, If it's not, I know there's student loan debt consolidation programs to keep a low payment with your student loans. So even if you do owe 80, 90, $100,000 back for a student loan, take a look and see if that's the best minimum payment for you and your financial situation at the time. I definitely understand coming out of college, income may not be where you want it to be or where your professor was telling you, hey, your income should be. But take a look and see like, hey, are there other options out there to consolidate my student loan to get a lower rate?
She's saying that the only debt that she has is going to be the student loan. So as far as building credit, how are student loans beneficial? Do you need something on top of the student loans?
Absolutely. And I would say, yes, to have a credit mix. So the question was the only student debt that she has was student loans. And does she need anything else to build her credit? And the huge thing is to have a credit mix. So that secured credit card and secured credit loan builder would be the mix that you need to kind of balance everything out. Personal experience, I would definitely say don't just cruise with just student loans as your credit because I did that for years and your credit score will not move.
Is it best to settle collection debts or pay off the full amount?
Yeah, I talked about it. I talked about it last time. It is best to always pay off the full amount. Do not settle in full because that still tells the credit agencies and any other vendors that you wasn't able to pay off your debt with that institution. You settled, which is possibly what it is a fraction or proportion of your overall debt that you had with that vendor. So that's always going to be on your credit report for at least 7 years. So always focus on paid in full, that you paid off your debt in full. Even if it's delinquent, and you came up with a payment plan, make sure if they ask you, hey, we can settle for a less amount. And I know it looks good, but you want to pay in full.
Can you explain debt consolidation again? Talk about with the credit card.
So she asked, can we explain debt consolidation? So are you asking in terms of like a debt consolidation loan?
Well, that's what I'm thinking. So is that because I've always heard it's good to do it that way. I've always heard it's bad to do it that way. So which way is it? Good thing or bad thing?
I feel with everything, there's a good thing and a bad thing. I can't remember how long ago it was that a lot of bad debt consolidation places were out there and they were like scamming people. I feel like that's where people think that it's bad. But debt consolidation is basically say you have, for instance, 5 credit cards from stores. So maybe like Bath and Body Works, Walmart, Target, stores like that. You have a possible small car loan, maybe a bank loan, and all together your debt is $20,000, but you have them separated in different loans. It's just pretty much putting it together into one loan. Sometimes you can get a lower interest rate than some of the cards that you were paying off before, maybe lower than your car loan. But to the creditor, it's going to look like you just have one large loan instead of 20 loans. I've seen a lot of people do debt consolidation when their debt kind of gets out of their hands and they have a lot of debt and their interest rates are kind of up and down. It's easier to do it that way. And it's a lot easier to remember. I have a friend that could not remember all the credit cards she needed to pay. She did debt consolidation. She paid it off super fast because it was one loan.
I have one credit card that I don't use. I've had it for a really long time. I forget it exists. I don't even have a physical card anymore. And I remember when all of a sudden the money's out of my checking account where it covers like the annual fee. So I'm like,
You're gonna get fucked up. There's a lot of people who have 50 cards and they're like,
oh,
can't
I would,
remember all that.
yeah, no. What about the credit companies that help you delete collections? You heard of those?
The question is, what about credit card companies to help you delete collections? And I'm going to go back to I don't think you can see it, but this goes back to repair and improve credit. Ask for goodwill deletion. That's what that is basically you're asking the credit card company not to show or report to the credit agencies um, any past or late payments that's on your account. So you can definitely ask a credit card company to do that, and they can change that reporting for you so it doesn't hurt you.
There's some agencies that will have you pay them to do that. That's something that you probably can do for yourself.
And back to the consolidation, will it hurt you if you consolidate on an account that you've had for a long time? We talked about the length
Keep it open.
of
Yeah.
credit.
So that goes, it wouldn't really hurt you. You can always keep that account open, especially if it's a credit card. It kind of depends if you're doing it yourself. Some companies will make you close accounts. I've seen customers do that, and they might just be okay with that, taking that loss. But say you can go into a bank and get a $30,000 loan and you're doing it yourself, keep those credit cards open because that'll show your credit history.
So just to add on to that, if you take your longest card that you have open and you put it into a debt consolidation and they ask you to close it, ask them is there any other option? Let's say that credit card is $2,000. What if you just back it down or call that credit card company and move it down to $200 limit? That may be a good space for you, but you always want to keep that card open. Especially you don't want to close it out. So they ask you to close it out, just ask them what can I do to keep it open. If I have to back the limit down to $100 while you go through this process, you still maintain a relationship with that credit card company. So when you go through this process, and hopefully you don't have to go through this again, and you want to increase that credit card limit because that's your oldest credit card, you can go back to them and say, hey, I paid down some debt. I want to increase my limit and see what they can do for you at that time. But keep it open. Do not close it out.
And I don't think any credit company is going to give you pushback to go from 2,000 to 200 because they're going to want to keep you as a customer.
I'm sure I didn't miss any. These are really good questions.
Great
Very
question.
good question.
All right, I think that looks like
All right. Well, thanks for tuning in, and hopefully you have learned a lot. I know that I have. Some of these questions that we're asking are actually mine. They just don't know that. So if you have other questions, post on video. Feel free to message. If you'd like to talk to either one of them, reach out. We can get you their contact information. And like they said, walk into the bank that you bank with currently, if it's not First Financial, and see what kind of programs they can offer and what kind of assistance they can give you. Again, it's all about planning for the future. And if you know where you want to go, you got to plan how to get there. So we all want a great 2021, and I think that working on that credit is a great place to start. So if you've got any questions about buying your first home or just cleaning up that credit in general, feel free to reach out and we'll give you all the help that we can. I think that covers it for tonight. If we don't see you before the holiday, have a very Merry Christmas. And we'll definitely be catching you in the coming weeks for more Facebook Live classes. Make sure that you are registering for those inside of the event so you get the Facebook reminder. Write those questions down so you have something to ask the next time and get those answers. So, all right, everybody have a good night.
Thank you.
Thank you.